Hey everyone, it's Mark Ferguson with Invest for More, and we're back with another real estate video. Today I'm talking about the current housing trends. We're looking at the February housing market report from Realtor.com, which has some really good data on prices, on listings, on days on market, all kinds of great stuff. I would love to do this every month. In fact, I should, so remind me if I don't do it, but it gives a really good insight onto what's happening in the current housing market. There's so many videos out there, so many different social media posts about how the market is crashing, and we will show you the actual data of the United States as a whole, not just a couple of markets cherry-picked or a couple of data points cherry-picked. We'll show you everything that's going on and let you decide for yourself if the market is crashing or not. I can give you my opinion, and it is not, but we'll show you that data and show you what's going on. Of course, I love the likes, love the shares, love the comments, and love seeing new subscribers as well. Most of my real estate videos are walkthroughs on our flips, our rentals, our businesses, but I have some advice videos and talked about a lot of different things as well. Just talked about the bank crash earlier this week, which is a little bit scary. We'll see what happens. Maybe that changes interest rates, maybe it doesn't, and we'll talk about that a little bit here as well. All right, so there's so many articles about sales crashing and sales dropping, and it's really important to know sales are not prices. When you see like record low sales or sales plunge, that's not the price of houses, that's how many sales there are. And every time you see high interest rates and an increase in interest rates, sales drop. Sellers stop selling and builders stop building, which means there's less inventory, less houses to buy. Not as many buyers can buy because rates make it higher, more expensive to purchase homes. So instead of having a lot of sales, you have fewer sales. But just because there's fewer sales doesn't mean prices go down too. In fact, sometimes prices even go up when there's fewer sales. We saw that in the 70s where rates doubled and housing prices tripled. So there's so many different things that impact housing prices besides rates, and we see that in this data. So some of the key points from here, number of homes for sale has increased 67% compared to last year. So that is the number of houses currently for sale, not actual houses selling. So that's important. But it's also important to know last year at the beginning of the year was crazy. Lowest inventory ever, some of the highest price increases ever. It's hard to judge year over year based on the start of last year. And luckily, Realtor.com shows us the last 5 years, and we can show you all those data points, which is nice. Total number of unsold homes, which including homes that are under contract, has increased by 13%. So it's increased, but still not very much, and we'll show you that. Home sellers are less active with 15.9% fewer homes being listed, and last year was like a record low for listing of homes. So that's very important. Median price of homes for sale has increased 7.8% annually in February, lower than January's growth rate, but it's still increased. Homes are spending 67 days on the market, which is 23 days longer than last year, but still shorter than before the pandemic. So that's something to look at too, is since the pandemic hit, the market's been crazy, right? No houses for sale, prices going nuts. And it's really nice to compare what's happening now to before the pandemic when things were still pretty normal and prices were still going up before the pandemic as well. And that's what we can do with this data. All right. And something else that's really important too, this is a good point here. Las Vegas and Austin see higher inventory compared to pre-pandemic years. There are certain markets that might be getting hit harder than others. That is 100% true. And those markets are usually the ones that went the most bonkers beforehand. You see it in California all the time, where California has some pretty crazy cycles. Prices go up way faster, and then they also drop more as well. And that happens every year in a normal year. If you look at the charts for like San Diego prices, it's not just a steady crawl. It's up, down, up, down, up, down. And so when you hear people say, oh, prices have dropped 10%, they almost always do every single year. So it's not an anomaly that happens. You really need to look at all of the data. But this is really nice because Realtor.com, I have no association with them. I don't get paid by them at all. I am a realtor, but actually Realtor.com is not owned by realtors. The Realtor Association sold Realtor.com a while ago. So it is not something I'm tied to at all, but it does have good data. And one more thing. A lot of people say you can't trust realtors. They're trying to sell you houses. They'll always give you skewed data. Personally, I want to get my data from somebody who's a professional in that industry and not just random people on Facebook or social media who don't know anything about that industry. So yes, if I get my data, I prefer to get it from people who know about the data, not random people. So everybody has bias, but these are census numbers, actual numbers. If they were skewing them or making them up, it would be a huge, huge scar against them, and there's no way they would make up numbers. So, all right. Active listing count up 67.8%. So people say, oh my God, there's so many houses for sale, things are going to crash. Well, look at this. These are all the different years, 2017, 18, 19, 20, 21, 22, 23. And you can see 2017, there were 1.15 million active listings. And you see they go up in the summer and they go down in the fall. 18, kind of the same trend, slightly different. 19, almost the exact same trend, just a little bit of different numbers. Then we hit 20, and it started a little bit lower, and then about the same trend, and then COVID hit, and boom, the bottom dropped out of active listings. That's why prices skyrocketed, because there weren't any houses for sale. If people wanted to buy houses, they had to overbid. They're paying more than asking price, and that continued into 2021, which is the green chart, and you can see it kept dropping when normally it's level and will go up. It kept dropping through spring, and then we saw a little bit of a rise, and then again a drop, and then 2022 it kept dropping again. This is the crazy low inventory. So we're talking about February right here, which is year over year data. This is a February report. So February was the lowest active listing count in the last 6 years according to this, but probably the lowest in the last 30 years if we went back through all the data, maybe even more than that. I know historically through HowLongRealtor.com keeps track of data, but then obviously they haven't been around forever. But this was crazy. So if you compare anything to this period right here, it's probably going to look like there's a lot more listings, a lot more going on because it was so low. But here's what's really interesting. Okay, so we follow 2022, then interest rates start to go up. Boom, we have an increase in active listings, which was to be expected, but still nowhere close to the previous pre-pandemic year. Still less than half of that. And then things leveled off. We didn't keep seeing a soar or a climb all the way up here. Things leveled off, got to November, and then boom, look at this. Almost followed exactly the normal market charts that we had before the pandemic. We see a drop in the fall of active listings again. And then, this is really interesting too, starting in January and February, another drop. So here in the normal years, you did see a drop here in 2020, but in most of the years, there's not much of a drop. And here we saw an even bigger drop, which is interesting. So we'll see what happens of the rest of the year, but there is not a massive amount of properties coming on the market. You can see it's higher than 2021, 2022, but still 50% of those normal years before the pandemic when prices were still going up. And we can scroll down here to total listing count. These are all the properties that are actively for sale, including homes that are under contract. And this shows that, if you can see that here, it's gone up slightly, a little bit. But again, so did it every other normal year. It also went up that same amount, or even more. We went up a little bit more than 2021, 2022. But still, it's so much less than what a normal year has. And it'll be interesting to see if this follows the normal curve and keeps, or if it somehow climbs back up to normal. But with high interest rates, people aren't selling, builders aren't building. So it's going to be very, very high, or very, very hard to get back to normal listing counts. We're still way below pending listing counts. These are the ones that are under contract and about to sell. So this is important too. So you can see normal years, all these are lower, right? We had much fewer homes under contract to sell. And then 2020 came around, and even before the COVID hit, we started to see more houses going under contract to sell. COVID hit, that dropped as everyone freaked out, and then it started climbing. Then it skyrocketed with people buying. Was that because they had more money or they're bored? Who knows? But tons of properties were going under contract. Then we see a drop in the fall, which almost always happens. A lot of people said the drop in the fall we just had was a crash. No, we almost always see that drop in the fall, as you can see. And then we come back to 2021, and you can see another increase, and then another fall, and then we go to 2022, and even fewer houses are going under contract, partially because there were so few houses for sale. It's hard to buy houses when they're not for sale. And then we saw this big drop off as interest rates came into play. So part of that was buyer demand dropped off again, went back to normal, and we pick up at 2023, and look at this, shooting back up again, just like normal years, just like every other year. We're seeing an increase in pending sales again. Nothing abnormal about what's happening right now in the numbers. Now we go back to newly listed homes, which is also really important to know about here as far as what might happen in the future. All of these are very, very similar. 2022 was lower, 2021 lower, but not crazy amounts lower. You can see the crazy COVID 2020, but you can see they all climb in January to March to April to May. You see an increase in newly listed homes in the spring after the holidays. Happens almost every year. And then after spring, you see a drop. And that happens almost every year too. In the fall, you see a big drop. And there's 2022. And you can see pretty normal, a little bit below normal for newly listed homes. Then the rates hit, and we saw a bigger drop than normal after higher rates hit. Fewer people want to list their homes. Builders stopped building. And that continued. You can see record low amounts of newly listed homes in 2022. And we come up, this is weird how those don't quite match. Wonder why that is. Anyway, well, probably just because it jumped up. Those don't have to match. That's right. It's just a monthly data source, so it's not prices. It doesn't have to match. But you can see newly listed homes did jump up in January, like they did every year. If you kind of track that over here, there's a jump. But look at this. This little curve right here, or line, is lower than just about every other year. There's still record low numbers of homes being listed compared to a normal year. And that's what happens when they increase rates. People stop selling. And when supply goes down, it's very hard to see a crash if there still aren't enough houses for people looking to buy. So it's really important to consider a lot of different factors besides just rates going up when trying to figure out what the market's going to do. And, all right, I was going to say, there's more. I know there's more. Days on the market. This is also very interesting. A lot of people say days on the market is skyrocketing. That's causing a crash. And again, we want to look at the data, 17, 18, 19, 20. And you can see all these were pretty normal. Days on market rises significantly over the winter. Houses are harder to sell. Spring comes along and that drops significantly. Then it slowly rises in the fall and shoots up here again. Except for 2020, which was all over the place and crazy. All right, so you go back to 2021, which became somewhat more normal. But you can see, again, following this curve on days on the market, very, very low. Very low compared to a normal year. Almost 50% of what a normal year would be. You come to 2022, even lower, crazy low. Again, record low amounts of days on the market. Then the rates got higher and the chart goes up. But notice something, it didn't do anything crazy compared to previous years. Yes, it went up, but it still followed a fairly similar curve and did not even come close to reaching a normal market for days on market. We're still way below how long it usually takes to sell a home. And we come up here and it goes up in the fall, winter, as every other year. And then we look and see what happens in January and February. Boom, it's dropping back down again. Days on market is following the exact curve it has every other year, pretty much. Nothing abnormal, nothing crazy. The market is doing what it's always done. Median listing price, up 7.8% compared to last year. So a lot of people are saying the market's crashing, we're in the crash, it's coming. Okay, you can tell which year is what year just because prices have been steadily going up. This is 2017. You can see this pretty steady up curve. Then notice it does drop in the fall. Every year prices drop in the fall. It's not abnormal. 2018, the same thing, except the price is a little higher. 2019, the same thing, except price is a little higher. You actually saw even a bigger drop there in 2019, but people weren't freaking out then. Anyway, 2020, it's following kind of the same curve. COVID hits, and then you see a big increase. Even in 2020, with how crazy the market was, you still saw a decrease in the fall, which is what we see almost every year. 2021, bigger increase. Look at that. You can see a bigger increase in prices. Bigger increase in the fall. Steady. Again, even in the crazy market, you still see prices drop in the fall a little bit. And then 2022 is even crazier. We can see that starting off with huge increases in prices. You see the difference right there. A massive increase, and then interest rates hit, and we can see this decrease, which is more, right? You can see it's a lower decrease than some of these other years, but you had such this huge rise. If you look at the year over year, right? This is year over year. There's still a big jump in prices, bigger jump than anything we had in the normal years down here. You can see prices have been increasing significantly. And then this year, January, we're still increasing prices. They're not dropping nationally. You can see this curve is almost identical to these normal year curves. Almost what happens every single year. We're not seeing a big drop. And will things keep going up? Probably not as high as these last few years. I would be surprised if that happened. But it would not surprise me if prices kept climbing a little bit, then leveled off, and then dropped in the fall, which is what happens every single year. Again, the market is not crashing. The world is not ending. Now, I should say something too. If the Fed decides to drop rates, which might happen, I don't know if they will do that, then we could see another increase because there's so many people waiting on the sidelines, waiting for rates to drop, wanting to buy, but they don't want to right now. If rates do drop, we could see a spike in prices again. And we need rates to drop because we need more supply, right? You can't fix price increases by killing demand on housing because people have to live somewhere. If you own a house. If you rent a property. Maybe it's a house, a condo, a townhome. But even if you destroy buyer demand, right, and you make it impossible for people to buy houses, they still have to rent houses. And if there's not enough houses for everybody, right, it doesn't matter if they're buyers or renters. There's still not enough properties. Then rents are going to skyrocket. If you make all the buyers rent, rents will skyrocket. Then that will also increase prices because investors will pay more because rents are going up. So the way you fix housing prices and the way you make them level out or not go up so high is you make it easier to build. You make it easier to increase supply. Raising interest rates does the complete opposite. It makes it harder to build, and we see that in housing starts just dropping off a cliff right now. And it's just going to continue to have this problem, especially with cities implementing rent control, more restrictions on development, going after investors like LA is with transfer taxes, all kinds of crazy stuff. All these things the government is doing to restrict building and make it cheaper is just bumping up prices. It makes it harder to build, harder to produce, harder to buy rentals. That means all the prices are going up. So until they fix the supply problem, we're not going to see a crash in prices. And if they do fix the supply problem, the last crash that happened in '08 was because of a massive oversupply of houses. Huge overbuilding problem. We're completely opposite. It takes so long to get to that point. It's crazy. But that's what usually causes a crash is an oversupply, not demand dropping. If demand drops, sorry, I keep going off on a tangent. I own a liquor store. I own a mini mart. I have a very small store. If I have lots and lots of sales at that store, I can buy in bulk. I can get cheaper products. I can sell my stuff at a cheaper price because I'm selling more of it. I make more profit. I can bring more people in. It's fantastic. It's win-win for everybody. Consumer gets lower prices. I sell more stuff. I have more profit because I'm making more things. If they kill demand and they say, we don't want as many people coming to your store, then you'll have to lower prices. I'm not going to lower prices. If I have fewer people buying my stuff, I lose the ability to do bulk orders and buy my things cheaper from suppliers. That means I have to pay more. My costs go up. If I have fewer sales, that means I'm making less money per sale. I can't pay my staff. I can't pay the rent. I can't pay utilities unless I raise my prices and increase the profit margin on the items I'm selling. This whole idea of killing demand lowers prices only works if there's a massive oversupply of goods. If there's not a massive oversupply of goods, it actually raises prices. So something to consider there. Okay, back to my little video here. Price reduce share. We all hear how everybody's lowering prices. There's record price drops. The market is crashing because all these price drops. First, I think that's silly because it's really hard to measure price drops, which we can do here, but most people don't. They just say there's price drops. And every market has price drops. That's normal. There's people who overprice their homes. They misjudge the market. That's normal. A not normal market is when you don't have price drops. But we can see 17, 18's orange, 19's red, 20's blue. And you can see the normal markets all have more price drops, then they drop off the edge. And when did we hear about all those price drops increasing? Last year in the spring and summer. So here we go. Here's yellow, and there was almost no price drops, just hardly any, which is abnormal. And then boom, things shot up. And this is when we heard the market was crashing, so all the price drops. And yes, they did shoot up more than normal. They shot up more than normal to get to a normal point. You can see they follow the other curves almost exactly. And look at this. Did they keep rising? Nope. They slowed down like the other years. There was a little bit more here. And then boom, fall hits. They drop down just like everywhere else. Now look at this. January to February, huge decrease in price drops. They're not increasing. We're not having more price drops. We're actually seeing a drop in those, which indicates stuff is selling, which is what all the other data shows too, and the market is not crashing. All right, I believe that is all the data I want to go over on this. It is. So, in conclusion, are fewer houses selling the last couple of years? Yes, we're returning to a normal market where fewer houses normally sell. Are prices not increasing as much? Yes, but again, the last couple of years were crazy. Are there more listings? Yes, but last year was absolute record levels for low listings. We're still not even close to a normal amount of listings. And are prices crashing? No. And are they going to crash? Probably not. Maybe if lots and lots of banks fail and the economy just goes completely in the gutter and everything tanks, okay, maybe if we have a huge amount of unemployed people, you can see the market get hurt by that. Again, it takes 900 days on average to foreclose in the US. So if we have unemployed people and they go through foreclosure, it's going to take years to see those on the market. We still have tons of people waiting on the sidelines trying to buy properties. And if that happens, if unemployment comes and the whole thing explodes, the Fed's going to drop rates like crazy. That's going to make houses more affordable. And then those people waiting on the sidelines who do have jobs, because not everyone will get fired, are going to start buying houses and probably save the market anyway. So what will happen? Nobody knows for sure, but the market's not crashing. It's actually pretty normal, not even back to a normal level yet. And we'll see what happens the rest of the year with rates. All right. Love the likes, love the comments, love the shares. Love to hear what you think. We'll have more videos like this every month. I'll try to remember. And if you have any ideas or suggestions for other videos, I'll be happy to make those. And of course, we'll still have the other videos of my walkthroughs, my flips, my rentals, my businesses. And yes, I am still buying properties to this day. All right. Thanks for watching. Be back soon.